Hello and welcome to part 6, the final video of this 6-part series of Property Profits Real Estate Business Building, where we help you grow a real estate business, not just a portfolio. My name is Gord Lemon and I've been involved in Canadian and US real estate for over 26 years. I've also helped many people build their own real estate businesses as a real estate entrepreneur coach and speaker, and I'm also a published author with many real estate articles in various publications. As this video will have some information which may be content and time sensitive, it's important that you pause the video, read the disclaimer prior to moving on. As you've seen in this video series, there's a lot to consider when choosing a mortgage. Going about the process in a lackadaisical manner can only serve to provide lost opportunity and potential missed savings or even a decline. Deciding where to go for a mortgage and who will give the best service, provide the best mortgage product options for the particular property, provide a competitive rate, and be able to follow through is critical to your success as a real estate entrepreneur. It is then crucial to understand what options are available to you in terms of going with your bank or going to a mortgage broker, and the pros and cons of each. And let's consider the factors that are most important. Number 1, what is the effect on your credit score? Number 2, what mortgage products are available from that particular source? What is the lender's qualification process? And what is the interest rate? So let's break these down. Number 1, what is the effect on your credit score? Your credit rating is an intrinsic part of getting a mortgage. Most prospective buyers aren't aware that in their effort to shop around and get the best deal, they can actually lessen their chances of even being approved. So each time your credit rating is being pulled by a bank or credit union, it is considered a new credit application. Regardless of whether or not you end up going with that particular bank, your credit rating is negatively affected. Also, each time you go from bank to bank, depending on where in the monthly reporting period the credit bureau is in, Bank C may actually see that you've gone to Bank A and B. And this can decrease your chances even further of getting a mortgage, because even though you went to Bank A and B and you voluntarily chose not to go with them for whatever reason, perhaps they didn't offer you the best rate you wanted or didn't have the mortgage product you were looking for, it looks to Bank C that they actually turned you down, and they'll often make that assumption. The loan officer at the bank will work within banking hours, and he or she will take your application and try and find a home loan that suits your needs. If your personal credit is approved, the officer moves it forward in the process down the line to the next department. When you choose a mortgage broker, they only pull your credit once, then they have most of the banks as well as dozens of other lenders they can take your application to. They could present your deal to 20 lenders and there's still only one credit pull. A mortgage product is a loan type. Lenders design different mortgage loans to cater to various situations people have, as well as varying terms and components, a lot we've discussed in this video series. The loan officers or mortgage specialists at a bank, credit union, or other lending institution are typically unlicensed employees who work to sell and process mortgages and other loans originated by their employer, i.e. the bank. They often do have a wide variety of loan types to draw from, but all loans originate from that particular lending institution. They may not have products or rates which suit the type of property you're looking to purchase. Now, depending on your province, mortgage brokers must be licensed and are therefore subject to strict requirements. Accredited mortgage professionals must take ongoing educational courses in order to maintain their accreditation. A good mortgage broker should have the knowledge of the mortgage products available in the marketplace and will be able to marry your situation and purchase to the proper mortgage product, often at a rate lower than a banking institution can provide. Banks have different underwriting guidelines. These guidelines are in place so that bank employees can tick off the boxes in order to halt the process or move you to the next stage of qualifying. These guidelines are in most cases very black and white, so the client must fit inside the client profile box for approval or they're shown the door. There are many underwriting guidelines and each lender's will be slightly different. The guidelines will encompass a client's income, credit, employment history, type of employment, i.e. salaried or self-employed, the type of property being purchased, the area, the value, the economic factors in that area, the down payment, and the additional collateral available, along with many other things. The banks also want you to be clients for life. They will cross-sell you other products they have to keep your business and make more money from you. It is important to know, and this may certainly be stating the obvious, but they are in business to make money. And they make money by renting their money, i.e. charging interest on it. The longer they have you in loans, the more money they make. So ask yourself, do they really want you to pay your mortgage off faster? Now, a mortgage broker will review your financial situation and discuss with you your future plans and risk tolerance and help you choose the right type of mortgage. They'll assess your situation and create different scenarios for you. They'll tell you the maximum dollar amount you can consider paying for a house or investment property and let you know what your weekly, bi-weekly, or monthly installments will look like. They will know the lender's products and take you to a lender with the right product for you and your situation. They can also assist you by creating a strategy so you can pay off your mortgage sooner. Let's lay down the pros and cons of banking and a mortgage broker, and this will allow you to decide which route is best for you. So let's begin with the banks. So the banking pros and cons. So pro, the banking perks. Perhaps they can get you free banking or even a free safety deposit box. Con, you must do the shopping. You must shop around for the best rate or mortgage product. Pro, the banks can often pay your appraisal fee, usually around $300, so you can save that much money on an appraisal. Con, you must be able to negotiate or else you won't get a good deal, so don't ever take the posted rate. That's like paying the sticker price on a used car. Pro, you get face-to-face communication with a bank employee. Con, rates aren't as good as what a mortgage broker can get you in most cases. Pro, the bank can provide a home equity line of credit. Con, your credit and income must be good for them to offer you that. Now let's deal with the mortgage broker. Pro, they can meet you on your time, not just during banking hours. Con, it's possible that you don't meet them depending on which mortgage broker you go with. You actually may not sit down with them. It's often up to you. And this can actually be convenient for many people as documents can be signed and scanned. Pro, competitive rates because they have more lenders to go to. Con, some of the lenders, unless you really know the players involved, you may not have heard of. Nothing that a good Google search won't solve. Pro, you may get approved for more money. Con, sometimes mortgage brokers can get you approved for more money even if your credit score is bad, which can be a good thing depending on the situation. Pro, they can find lenders even if your credit is bruised. Con, I don't have a con for that. Pro, they will negotiate for you to get the best rate. Con, I still can't think of a con. Pro, sometimes they'll pay for things like inspections or appraisal out of their own pocket, so they actually get less commission. But it's good word of mouth advertising for them, and you may go back to them once your term is up. Con, well, what's not to like about that? Really. A mortgage broker saves you time and energy and provides personalized service, sometimes with very flexible hours. They offer specialized knowledge and will work hard on your behalf and do all the negotiating for you. They can help improve your overall credit rating by advising you which credit cards to use and which to leave idle during the process. A mortgage broker costs you absolutely nothing because they're paid by the lending institutions and not you. Well, that's all the time we have for now. Now you have more ideas to think about when choosing a bank or mortgage broker for your next mortgage. I hope you enjoyed this series. Lots more tips and strategies on this channel or at www.canadianrejvclub.com or PropertyProphets.ca. And please don't forget to like us on Facebook. Thanks, take care, and we'll see you next time. Bye-bye.